Hello and welcome to the Cryptocurrency News channel. I usually don't really do segments like this, but if you are into futures trading or leverage trading, there is a very simple strategy that works most of the time. Obviously, if you're using high leverage, you're still going to get liquidated a lot of the time because the crypto market's just so volatile. But if you're going maybe 2, 3, 4x, there is a strategy that probably works 70, 80% of the time. And that is the market does tend to double dip at specific times of the day. And that kind of correlates to when the US market opens and when the Asian market opens, because they tend to go in the same way. If there is a big dip during the day on the US market, generally at around 6 or 7 p.m. or 8 p.m., you can see another dip kind of when Asia comes into action. Because all stock and asset markets around the world are kind of correlated, a big drop in one area of the world will generally trigger a big drop in another area of the world, even if the countries are antagonistic to each other. Let's say the US stock market drops a lot, China's stock market will actually drop a lot. Yes, they're antagonistic countries, but the economy of the world is so intertwined and that each country essentially depends on the other for trade, and the global economic markets are all affected by the major powers. That is the same the other way around. The US tends to affect other markets a lot more than other markets tend to affect the US because we are the dominant economic power in the world. So essentially, if the US market drops, then most likely the Nikkei will drop, and most likely the Hang Seng will drop, and the Shanghai index will actually drop as well. So that's how you can actually predicate it. So if you see a massive drop, if you see a big drop in Bitcoin, essentially during the day, and then it gets a pop slightly back up, you might want to buy in if you're doing day trading. You might actually want to buy in if you're actually day trading around 5 or 6 o'clock. Or maybe slightly before that, after the initial drop, but after the pop-up. And then you will probably get another dip. I've seen this, it works 70% of the time. The other 30% of the time you are gonna get kind of screwed, but it really depends on the kind of market it is. Basically around 6 or 7 o'clock, I do see it drop a lot the second time when the Asian market opens, because that's when all the Asian traders from Japan and Korea, China's not really part of this because Chinese people can't really access crypto. Most of the country's blocked, and they have actually started going after people that actually use VPNs and proxies and stuff like that. So not many people are actually doing that at all, but Japan and Korea, they trade a lot of crypto. They like to speculate a lot, and they do actually like to speculate a whole lot in Japan and Korea. So the thing is, when they see the US market drop, a lot of them start selling off as well, and then you get that second dip. And then regardless if you hit your goal or not, you should probably either, if you have a short, you should definitely close that position and take your profit, because many times it does go on into the second day and it bleeds more, but there are many times where it pops back up on the second day. It really depends on the overall economic condition. But I think 70 to 75% of the time, the double dip does work, once for the US market and once for the Asian market. So essentially, if I was a day trader, if I was actually playing for leverage, I would use small leverage, maybe 2, 3, 4x, and then play on those changes. Because a lot of times that second dip can get you an extra 10, 15, even 20% if the first dip was really big. You don't want to buy directly after the first dip because there tends to be some kind of small relief rally afterwards. But then around the Asian time, when the Asian markets start dipping because the US markets have actually dipped. And this definitely works better if it's a day where crypto fell because of the stock market. If the stock market's up and then crypto falls, it may not happen as often, but if both the stock market and crypto fall at the same time, then the second dip in the Asian countries is much, much more likely to happen. That probably goes up to 80% or something. Yes, you will still get it wrong some of the time, because nothing's 100%, nothing's foolproof. Doesn't matter how good your TA is or whatever. It's really not foolproof. But that's the pattern that I've actually seen the most. Now, it happens less often that if the Asian market dips, the US market follows. It's much more if the US market dips, the Asian markets follow, because like I said, the US's economic strength and influence is actually still much greater than places elsewhere. You can kind of look at Europe as a middle ground, because Europe is time-wise, it's between the US and Asia. The US and Asia are the two biggest movers, but sometimes Europe can give you a precursor. If Europe is going down too right at the United States, then you basically know that then it's much, much more certain that when Asia actually opens, it's probably going down as well. People, like, you might be like, well, won't traders buy the dip? No, they kind of like sell off when everyone else is selling off, at least the vast majority of the time. So that is the one pattern that I've actually seen to be true across times. And you might only be able to get 10 or 20% off of it, but that's still a pretty good gain, you know, for a really short trade. So like and subscribe, hit that bell notifications button. Thank you and have a nice day.